The Ethereum merge is the biggest narrative of 2022 so far. So in today's show, I'm going to be going through 5 altcoins that I think could perform and are performing well off the back of the upcoming Ethereum merge in September. We're also going to recap the market, what went down on the weekend, where we are looking in terms of the macro, and get straight into the biggest narrative that I think is going to continue to dominate the rest of 2022 and how you can actually prepare for this narrative. Make sure you smash the like button for the show. It's going to be a massive show. Without further ado, let's get straight into it. So before we get into any Ethereum talk, I want to go through Bitcoin and what is actually happening on the markets right now in terms of the Bitcoin price. Now, we can see at the moment the Bitcoin weekly chart actually closed above the 200 MA. This is a very, very key level that we knew we wanted to get above. Obviously, that 200 MA being a very historical, strong level of support for Bitcoin. And we could see that we had capitulation in 2015 here. We had capitulation in 2018 after that bear rally. After the bull market kind of collapsed. We also had a little touch in 2020. You guys all remember that little June bear market. And recently, we actually went and touched that level again. But we didn't just touch that level. We actually broke below this level, and it was a cause for a lot of concern, and it still is a cause for concern in terms of the overall macro TA trend of Bitcoin. But we can see that we did close above this level. As Ran alluded to on the earlier show, this is probably the single most important indicator in Bitcoin right now. So as long as we're above this, I do have hope that we can continue to see a further rally in August and going into September, going into the ETH merge. Now, there is a couple invalidations for this theory that we can get a rally in August. Obviously, if inflation doesn't come down, that is a major reason why we wouldn't get a rally. Another reason is the Ethereum merge actually getting delayed. We know that it is slated for September 19th. If that gets delayed again, that probably puts a little bit of a cloud over Ethereum and therefore the altcoins in the near term. We know how dominant Ethereum has been over the altcoins lately. So Ethereum has been leading the pack with Bitcoin dominance actually going down and down and down. And we can see that the Bitcoin dominance right now, it's smashed through that major support level on the daily. We're currently on this next horizontal ray, which we broke down below briefly yesterday, and on the 4-hourly we got a slight bounce there, but we've got the 50, the 100, and the 200 MAs as major levels of resistance coming up in the very near future. So I see Bitcoin dominance continuing to trend downwards. Now, I'd love to see a temporary push up in the dominance, which would mean some liquidity coming back into Bitcoin. But for now, we are seeing a constant weakening of the dominance. And if we drop below this ray, I expect us to come down another 1.6% down to the 41.3% level. Now, if dominance comes down another 1.3%, and that does coincide, with a strong Ethereum and strong altcoins, that could potentially just give us a little bit of breathing room for an alt rally in August. And these are just the charts that I'm looking at to kind of substantiate that theory that definitely could be the case. And I want to make sure we're all prepared for that scenario. And we also have a clear invalidation of when that scenario doesn't play out, but also a scenario where, we can take advantage of a potential rally in August if we get one without exposing ourselves too much to the downside. And that is our exact goal as investors. It's about managing our risk reward, making sure we have exposure to upside when there is upside, and making sure we've got clear invalidations for the downside. So let's go with the presumption here, that we do see a strong August or heading into September, heading into the Ethereum merge with this strong narrative. What would be our invalidation scenarios, and what are the key scenarios on the Bitcoin chart that we are actually looking at? Well, I've been charting Bitcoin for the last few weeks, and it's been sticking to this trend actually remarkably. And this is the 23K trend, printing higher lows above the MA. So what we have actually seen here is after we broke out of this range high, we broke out of the pennant that a lot of people were monitoring on the daily. We can see that we did come up over the weekend to 24,600. It kind of looked like a bit of a double top. It was a quick rejection and then a wick down to 23. Now, this 23K level, still a very, very, very key level. If Bitcoin wants to maintain short time frame bullish structure, 22,400 to 23K is still that level that I'm looking at very closely. And I actually opened along at 23, expecting a little bit of a bounce, which we ended up getting. I just put a couple grand in. I got a nice little bounce. My idea was to actually start laddering into a Bitcoin position and an altcoin position over the next few weeks. I got my first entry on higher leverage, which I may cash out and lower the leverage with a higher amount of capital. That's something I got to decide over the next few hours. But we did get the bounce at 23, which I was hoping for. And that ended up being an okay trade. And you guys also know on my Instagram, I gave that 20,800 long, which is still valid. I did actually take most of my profits on that long. Took it a little bit early, took it into resistance, which I was happy to do just in case our theory got invalidated. But obviously the thing is, as investors, we have spot bags, right? So if I have a large Bitcoin spot position and I'm also in a Bitcoin long, then I don't mind cutting my longs a little bit early on the leverage side because I already can ride my spot. So if the market pumps, I don't really care too much if I miss out massively on these leverage trades because I have my spot position. Whereas you kind of want to hedge against spot. That's why I've enjoyed shorting lately. But this isn't a market that you actually want to short because we are still above on the 4 hourly, the 50, the 100. We're still above the 200 as well. So we are showing we are showing bullish continuation, and we could see the higher low, and another higher low potentially forming here, which would be obviously a continuation for Bitcoin that can take us up to the 20K region. So what do we need to see before this theory is invalidated? Well, firstly, this diagonal support line. Haven't been a huge fan of diagonals in the past, but on the 4 hourly, I don't mind it for confluence. And we can see that that is in line with around the 22K level at the moment. But that has confluence with two ranges. The first range is this horizontal ray at 22,500, which has been quite strong. Also, we got the 3MAs, and then also, worst case scenario, we have 21,600 to 21,900. Now, if we did come down and test these levels, that would not actually break my thesis. I think to actually break my thesis, we would need to close two things. We would need to close under on the weekly under this 200 MA. That would be the first thing to kind of eradicate my thesis. The second thing that we would need is a break below the support and a break below 21,500 to 21,900. That is kind of my invalidation for the bull trend continuing. And until we actually invalidate at those levels and I have stops on those levels, then I will continue to trade this upwards and I'll continue to take advantage of the short time frame trend. You can't really fight the trend in crypto, and that's something I've learned over the last few months as a trader on my journey to become a better trader. Obviously, I am primarily an investor, but it's something I've been dedicating more time to, and that is you can't fight the trend. The trend is your friend until the end of the trend. Remember that, guys. And if you do want to trade, there's a link in the description to ByBit. We have a $4,200 bonus if you sign up for a new account. And we also 10x accounts live on the show. So get involved. I'm doing a little bit of live trading on my Instagram after the shows every single day with you guys. It's been really cool. We've been hanging out. We've been putting some trades through. We've been discussing the markets and also Tricky. You guys know sounds tricky. My friend also from Melbourne, we do a lot of trading together. So that's a lot of fun. So if you don't have an account and want to join in on the fun there, then there is a link in the description to do so and take advantage of that bonus. But let's get into the rest of the show here, because the main topic, although I've been talking about Bitcoin for the last couple of minutes, the main topic is obviously Ethereum, because Ethereum is leading the altcoins at the moment. Ethereum is the narrative that's driving this entire market. And if it weren't for the ETH merge, I'd probably come out and say that Bitcoin probably wouldn't be showing the strength it is right now. And I know that altcoins certainly wouldn't be showing the strength that they are right now. So I think what we need to do is have a look at some of the Ethereum ecosystem coins that are going to benefit off the back of the ETH merge. Now, we've already seen a lot of these run. We're already seeing coins like Lido, coins like Arbitrum, coins like even Yearn Finance that are experiencing massive pumps that have popped. We call them popcorn altcoins that are just popping out of their formations and showing relative strength against the market at the moment. And that's obviously off the back of this ETH merge narrative. But I still think that there is room for profit here. I don't think that the narrative is necessarily over. Although we are currently sitting around 49 days away from the ETH merge, I think there is still room there for this narrative to play out a little bit. Now, yes, if you aren't already in an Ethereum position, it is a little bit harder now than it was a month ago to get that really, really strong entry. But I think there is still a potential trade here. And I want to go through some of the alts that not only over the next month are going to perform well, but in the long term, because I think what a lot of people are forgetting is that the Ethereum merge is a bullish narrative, but it's not just a bullish narrative for September or August. It actually changes the fundamental way that ETH operates. ETH becomes deflationary. ETH becomes more palatable to institutional investors via a reduction in the energy consumption, a 99% reduction in the energy consumption of Ethereum. So I think a lot of people are forgetting and getting kind of caught up in this short-term ETH merge rotation play, that they're forgetting how bullish this can actually be for the ecosystem alts long term. So irrespective of what we do over the next month, and yes, I'll get into a potential trade I think could be good in a few minutes. I think that long term, these are some of the altcoins we should be eyeing to accumulate anyway. And I know that Rand's looking to accumulate some of these L2 plays. I'm looking at adding them to my long-term positions. Obviously, you guys know I've been a fan of Matic over the last few weeks and the biz dev that they've done. So I don't think it's something we can necessarily ignore at this point. Now, I want to start with someone that's highly respected in the industry, and obviously that's Raoul Pal, to start framing this ETH narrative a little bit. And we can actually see that Ethereum active addresses for the last 7 days, the rolling total of addresses has eclipsed the Bitcoin active addresses over the last 7 days. Now, there's a lot of people that share the belief that Ethereum is the better risk reward play than Bitcoin, and that Ethereum offers more upside in this market than Bitcoin. Now, I'm not necessarily sure about the risk reward argument, although I probably would lean that way. But in terms of pure upside, Ethereum does offer much more upside than Bitcoin. And obviously that's just my opinion. But I mean, that's really the truth. And that just boils down to what the network effect actually is. Obviously, Bitcoin has the Lightning Network that it can use to scale and issue payments. But Ethereum is really built to be that decentralized smart contract blockchain platform that can scale and can take advantage of network effect. Bitcoin, on the other hand, the network effect isn't as prevalent due to the main narrative right now for Bitcoin being a store of value. Whereas Ethereum is kind of leaning towards, more of that functional blockchain type chain. Whereas obviously Lightning isn't that efficient for conducting mass transactions on scale. Ethereum can actually do that, and hopefully the merge brings it one step closer, switching to proof of stake to actually doing that. And we can see this already reflecting in the active addresses, and obviously the daily transactions for Ethereum. And that Raoul Pal actually says other tokens will outperform ETH, and I would agree. There are smaller caps that definitely should outperform ETH, but crypto overall will outperform other assets in my view. He says that his hunch is that the market is caught underweight, as in equities too, and that the path of pain is higher, but that's just shorter term thoughts. The long term is clear. So, saying that there could be shorter term pain, but the long term is clear in terms of ETH and in terms of crypto as a whole. Obviously, Raoul Pal, very, very, very bullish on ETH. I guess if I was being a critic, I would say that he was very, very bullish last year in November. And I guess that thesis didn't really play out, but of course, a lot of us were as well, and a lot of us were invalidated on our thesis in November, so I can't really give him too much stick for that. Considering that he puts out such great macro knowledge and great knowledge of the markets, and we could see this in the massive thread that he posted on August 1st yesterday. And I would definitely read through this if you have time, because he has great insights into the market, and he's a busy guy, but he still makes time for posting things like this on Twitter, which I really respect. And obviously he has a very strong thesis on Ethereum being his biggest holding, and being the holding that he accumulates the most out of any altcoin. But Ethereum, off the back of the merge narrative, knowing that we're going into this in September, has been an altcoin that has outperformed the market. And if we look at the ETH Bitcoin pair, we could see just how strong it has actually been. Now on the 4 hourly, we could still see continuation of this uptrend. It kind of looks similar to the Bitcoin chart at the moment in terms of making these higher lows. And we could see that it actually did close above the previous high and this previous level of 1,637. That has been very strong support and resistance. Now, closing above this on the 4 hourly for me was a bullish indicator that we can continue to push higher. And we are still sitting above the 50 and the 200 MA, which is also showing a bit of strength. Knowing that if we do come down to this general support line, this general trend here that I'll just fix up, that we are still printing higher lows, and that could take us down to 1566, but that would still be bullish continuation. Now, the key level we really do want to break above for Ethereum is 1700. Now, if Ethereum does break above 1700, I think this gives us a clear path to 2000. And this is something that I'm looking to play out over the next week or so that I definitely think could happen. Now, there is also a scenario where we potentially break down a little bit lower to this trend here. Worst case, the lowest I really want to see us go on Ethereum is this previous ray, which is 1428. And obviously I'd much prefer if the previous ray was actually at the 1600 mark, which was that other level of support. But if we did have to come down, this would still technically be bullish, but it would be showing a little more weakness in the short term. If we broke below that level, that would start to invalidate my thesis on Ethereum a little bit. I just wanted to give you guys my invalidation so we're on the same page, because we can't just all be up only in this market. We have to look at the invalidation theory. But technically, even if we do break diagonal support, this would still be bullish, although I don't want to close too far below this 200 MA in the short term. Obviously, that wouldn't be great in terms of the short time frame price performance of Ethereum. Considering, if we zoom out a little bit on the daily, we are still holding structure. We broke above this channel. We're still holding this support line here. I wouldn't really want to see a break too far below this, because that would indicate, we're coming back down into this channel. But I do think that right now, the odds or the probabilities do remain in favor of the upside in the short term. That's, something I'm sticking to. That's how I'm trading. And now you guys know my invalidation level, which is a break a lot below the support and the horizontal. I think it's around 1500. I'll just get the exact figure for you guys. There's two levels I'm looking at. It's this 1421. That is like the very, very, very lowest I want to go. If we break below that, we're screwed, basically. But that is the very, very, very lowest I want to go. And ideally, it's actually the 1535 kind of region that I'd much, much prefer to hold. And that would obviously indicate bullish continuation. But if we do continue, this obviously means there will be a rotation play, because what investors do is they don't just invest in Ethereum. A lot of investors now are starting to cycle those profits into some of these altcoins. And that's why we've seen altcoins like Lido, altcoins like Aave, Arbitrum, Uniswap actually start pumping over the last few weeks, because there has been a bit of a preempting of this Ethereum rally heading into the Ethereum merge. And that's the rotation capital play into some of these ecosystem altcoins. So I want to go through five of the altcoins, give you the fundamentals behind them, why I'm looking at them, why I think they could be the biggest beneficiaries of the ETH merge in September, and potentially if there's a little bit of a trade here. And not only that, if there's an opportunity to load up on spot here long term, as these altcoins will be the major beneficiaries, not just until September, but in October, November, December, heading into next year and beyond, because these are the altcoins that underpin the entire ecosystem. So let's get straight into those 5 altcoins now. If you're following me on Twitter, I cover these altcoins on my Twitter, but I also want to give you a few bonuses for the YouTube audience today as well, and give you a little bit more in-depth insight into why I'm looking at them. It's actually very interesting, though, if we look at Glassnode, in terms of Ethereum as a whole, 68% pump for this bear market rally right now. Now, I don't mean to be too bearish with this chart, but we can see that Ethereum's already had 3 bear market rallies so far in 2022. This one's 68%. The 2 previous ones were notching around 51%. This one is by far the biggest. So it indicates either 2 things. One, we're starting to get into overbought territory, which would obviously, result in us coming down a little bit. Or 2, this is actually a break of structure, and it's a temporary break of the bearish trend, and it's indicating a reversal. Now, I would love to believe the latter. That is kind of the thesis I'm trading on right now. That is a short-term reversal before bearish continuation. But obviously, proof will be in the pudding. You guys know my Ethereum levels now. You've got those key levels for when this invalidates. But until then, we are still looking at an Ethereum rally for the time being. We're trading the trend here. And the trend is showing that these altcoins are absolutely exploding. If we look at the Ethereum ecosystem coins, if we look at the 7-day, most of these are actually up. Now, I know this might not seem like a lot because, Uniswap 13%, Chainlink 6%. If we actually take them from their lows and we take them from the price a month ago and we look at it to today, some of these are actually double. Like Uniswap was $4. It's now $8.38. So that's almost doubled in price. What other ones do we have? If we look at Lido, it's done a similar thing. Arbitrum, it's done a similar thing. If we go in and look at what are some of these other ones, Polygon, obviously that went up around 120% from its lows. So a lot of these coins have severely outperformed the market. And I think there are some Ethereum ecosystem coins which still haven't really had the pop that a coin like Polygon has. And I'm going to get into those coins now. So how do you capture Ethereum's upside? That is the big question. Here are the 5 ETH plays to actually help capture that upside, because the merge is obviously one thing that we know is happening. But how do you actually capture the upside of the merge? So obviously it does 2 things, as I explained before. Decreased issuance, making Ethereum deflationary. Decreased energy usage, which makes Ethereum more palatable to institutional investors. This theoretically should help its adoption institutionally. I do think there will be a lag on the positive effects that we see from the reduced environmental energy consumption. I do think that this is more of a long-term trend that will hold Ethereum in good stead. I don't see this as something that all of a sudden Ethereum goes to proof of stake and then all these institutions flood in. No, I think it's more long-term positioning itself as an asset that those kind of institutions are more interested in. So I think long-term, the merge does have bigger implications than just this year, as I've said multiple times already, because it doesn't just really start with the merge. You guys know we got the surge, we got the verge, we got the purge, we got the splurge. I mean, very funny names from Vitalik there, but we got 5 key events on the Ethereum roadmap over the next couple of years, some of which are happening simultaneously. I know the Verge and the Purge are kind of happening a little bit more linear, a little bit, actually, no, they're happening simultaneously, whereas the Merge and the Surge should be back-to-back events, more linear, sorry. The Merge is obviously the first upgrade, and then we got the Surge, which is that next major upgrade where Ethereum introduces sharding in 2023, and that's the major scalability push that Ethereum is making on its path to scalability. So after those upgrades, in combination with the proof of stake upgrade, I do think the future looks bright for Ethereum, and it's no wonder why it's outperforming the rest of the market right now. So the first altcoin plan, this is the obvious one to capture Ethereum's upside, is Matic. Ethereum basically, I wouldn't say it's nothing, but it certainly is not as strong without Matic. Like Matic basically underpins the entire Ethereum ecosystem because it actually offers that bridge and that scalability component outside of the Ethereum mainnet. So we know how easy it is to bridge assets on and off Matic. We know Matic is that settlement layer for transactions to validate off the Ethereum network, but still transact on the Ethereum network because Matic's EVM compatible. It's essentially, as I call, a Swiss Army knife of scaling solutions. So it uses, obviously, ZKM. We got that big announcement. We know it uses its side chains to actually scale. It has the plasma chain. It has a whole suite and a whole array of technologies that go into actually underpinning how Matic helps scale Ethereum. And I think it's very important for the success of Ethereum as a whole because a lot of developers are actually choosing to develop on Matic because they can retain that interoperability with Ethereum, but at the same time, they're getting a much more scalable platform, a much cheaper platform, a much faster platform than Ethereum, which probably may not reach a similar level of scalability for many, many years. Like Ethereum, although it's introducing sharding next year, it's still maybe 2, 3, 4, 5, maybe even the best part of a decade of reaching the scalability that it needs to reach to actually support the amount of dApps that are going to onboard. And one could make the strong argument that even by 2030, the demand for blockchain will increase so much to the extent that something like a Matic will still be highly utilized and actually highly demanded in the market. That's part of the reason why I'm adding this to my long-term bag. In terms of the short-term rotation play, this one isn't the strongest of this entire list because it's already pumped a lot. But in terms of something that we are adding and accumulating long-term, this is well on my list. And we've seen the BizDev being some of the strongest in crypto. Like, this is kind of crazy. Like, what other altcoin actually partners with DraftKings, Ticketmaster, Adobe, Stripe, Meta, Flipkart, Reddit, and Disney? Like, that's crazy. Their BizDev is basically unprecedented in recent times. I mean, 2022, people talk about building in a bear market. Well, that's exactly what Polygon's doing. Now, I do have some criticisms of the tech, and I did a full Matic deep dive last week, which you can check out if you want to find out a little bit more about that. I mean, it's not the best tech in crypto. There are blockchains with better tech, don't get me wrong. So even though it's the Swiss Army knife, it's a little bit of a blunt Swiss Army knife to today's standards, or in comparison to some of these other alts, which are much faster. Like I personally think Solana, even Phantom, like much faster chains, probably have better technology at the current time. But the amount of backing that Polygon has and their BizDev, kind of hard to ignore because, I have faith that their technology continues to improve. And off the back of these integrations, it's hard not to be bullish long-term, to be completely honest with you. The next major one is Uniswap. So this is kind of a very obvious one because, if Ethereum actually gets and accrues more users over the next few years off the back of the merge, then those users are going to need to swap for assets. And they're going to head to the most proven DEX. They're going to head to the DEX with the most liquidity. They're going to head to the cheapest DEX. And if they want exposure to the upside of the narrative, they're also going to invest in the DEX that captures the most value of Ethereum's upside. And right now, and probably in 2 years, that is still going to be Uniswap. So that's why Uniswap is on this list, because it'll help you capture this upside of Ethereum. And that's exactly why it's in here, because look at the actual volume that it's putting through. $870 million of 24-hour volume. Uniswap V2 and Uniswap on Polygon also contribute to another 150 million, putting it at over $1 billion, which is an 8x from its next competitor, which is PancakeSwap. So it's basically trumping every single other DEX right now. Last year, during that huge L1 rotation, we did see Solana slightly push up into the top 3. We saw Phantom. We saw Trader Joe do it on AVAX. But Ethereum, at the end of the day, in a bear market, it continues to dominate this list, and Uniswap is always at the forefront of that. Now, it's also number 2 for fees generated. It actually almost trumps Ethereum itself for fees generated, which is crazy. Not quite. It's still roughly like 40 to 45% off the average fees of Ethereum, but it's very, very close, which is kind of astounding. It actually does triple the amount of fees than the Binance Smart Chain it does. So the DEX Uniswap is doing more fees than chains themselves, and it does more than Bitcoin itself, and more than Aave, and more than Trader Joe, and all of these other platforms. It even does more fees than Matic. So Uniswap is a very practical example of something that actually is generating revenue. Now, just buying the Uniswap token doesn't give you access to 100% of the revenue. I think this is a misconception a lot of people have, that, it's generating a lot of revenue, so let's invest in it because I'll capture the upside. No, every single token has different tokenomics. Every token captures upside in a different way. If you want something that captures upside from transactions and from trading revenue, then DYDX and GMX are going to be your top two plays. They're the decentralized perp exchanges. I'll do another video on this in the future, but they're the two that I think are going to give you a strong chance of capturing that upside. The Ethereum token captures the upside in a different way. It doesn't take fees from swaps. So whenever you swap on Uniswap, you're not actually earning fees. You earn fees from the LPs. So liquidity pools to actually provide liquidity for the swapping of assets. When people deposit in an LP, when they farm LP rewards, when they compound, those fees are the ones being paid to the Uniswap holders. The actual swapping itself, the fees don't go to the holders. And that is so Uniswap can keep its fees actually lower to incentivize more people to use it over its competitors like SushiSwap. So if you do choose to hold and stake Uniswap, you get governance. So you can actually vote over where the treasury allocates assets, over what percentage Uniswap actually allocates of LP fees to stakers. You get the protocol fee switch, which is exactly what I'm talking about in terms of the percentage of LP fees that go to stakers. And obviously, you also get access to the treasury, which is the largest holder of Uniswap tokens on the market. So it has those three purposes. Strong-ish tokenomics, not as strong as other altcoins because it doesn't have amazing value accrual like something like a Frax or a GMX does, but it's solid and it will give you enough upside still through these three mechanisms to capture the growth of Uniswap and thus Ethereum, being the biggest DEX on Ethereum. The fourth one is, and the fourth altcoin in the Ethereum ecosystem is Lido Finance. Now, obviously, Lido is a liquid staking platform. So here's the thesis behind Lido. Ethereum moving from proof of work to proof of stake means that people will need to stake their Ethereum in validator nodes in order to secure the network. So miners no longer secure the network through mining Ethereum and completing transactions. Now the way to validate and secure the network instead of mining is actually through staking. Now, this obviously increases demand for staking. It does two things. It increases the need for staking to keep the network secure and decentralized. And it also increases demand for staking as people can earn 7.5% on their Ethereum. Now, 7.5% on a relatively good risk-reward adjusted asset like Ethereum is pretty good. Bitcoin, you'll be earning a lot less than that, and through centralized exchanges, which recently have proven to be a lot riskier. Through Ethereum, you can stake through the blockchain itself, assume much less risk, and get an estimated 7.5%, which is pretty good in my opinion. So I think the demand for staking is going to be very high. Now, when you're staking, you've got two options. The first option is to actually stake through a validator. And if you stake through a validator, you'll need to lock it up. Now, the longer you lock it up, the higher your rewards are. But the problem with locking it up is you don't retain liquidity of your assets. Let's say the market drops and you need to sell. All of a sudden you don't have liquidity to sell. And we saw Ran on Scott Melker, his podcast yesterday, and I think that's a very great video to watch if you want to learn more about Ran and his Luna story. That's exactly what happened to Ran when Luna collapsed. He couldn't get his Luna out because there was an unstaking period of 21 days. Now, if a huge market crash or some huge exploit happens with Ethereum, some black swan event happens with Ethereum, I don't think it will, but of course, we have to prep for every single scenario as investors in crypto. Then you want to have liquidity of your assets because you don't want to end up like Ran and like even I was with some of my Luna where we couldn't actually sell because it was locked up. So, of course, you can hedge. You can perp hedge with a short position on one of the exchanges. But in terms of your spot bags, you want to retain liquidity, right? Not only does it enable you to sell if you need to sell, but it also enables you to take advantage of the best yield. If suddenly a new farm opens up that's paying 50% through an LP, a single stake LP, then of course you're going to want to deploy capital there. That's just efficient capital allocation, right? As DeFiers and as DeFi enthusiasts, we want to take advantage of the best yields in crypto. That's part of what my show wants to help you guys do. And I can tell you right now that by keeping liquid, that sets yourself up in the best position to do so. So long story short, Lido Finance enables this because it's liquid staking. So it gives you a receipt of your Ethereum when you stake, and that receipt is staked ETH. And you can go in DeFi with the staked ETH because it trades one-to-one with Ethereum. You can swap it. You can LP it with Ethereum to earn extra yield on top of your yield. So even though you'll be earning the 7.5% on your Ethereum itself, if you pair it with another asset like staked Ethereum, you can earn extra yield. Let's say an extra 5% yield on top of that through their LPs. Because obviously, people are going to want to swap from staked ETH to ETH. So in order to facilitate swaps, you need liquidity. So they're going to need LPs. And the only way to incentivize LPs is going to be through offering yield. And offering yield means you can earn extra yield, additional yield on your staked ETH. So Lido Finance, it will see a very large increased demand for Ethereum, and we are already seeing this. We can already see that Lido currently holds 31.3% of total staked Ethereum. 33.1% of staked Ethereum so far is already on Lido. If this trend keeps anywhere close to 31%, it will be by far the most utilized platform staking. It'll be by far the platform that captures the most TVL in terms of the amount of Ethereum being staked, aside from the validators. And I think for this reason, Lido is set to become one of the biggest beneficiaries of the ETH merge, because people are going to need to stake their ETH, and they're going to want to do it through Liquid. And Lido is currently the best platform. Now, there is a few others that are going to be doing this. There are a few other liquid staking platforms, almost not even worth talking about. Like, obviously, we've got a few here on the right you can have a look at. Some of the exchanges, Stake.us, Stakefish, Rocket Pool. But, I mean, Lido is just trumping all of them right now. Here's the caveat, because you may think, I'll just invest in the LDO token, the governance token of Lido. I'll get upside to all this TVL coming in. It's all sweet. Once again, tokenomics are now the key consideration, because value accrual isn't linear. It is relative to the tokenomics setup and configuration of each individual protocol. Lido itself, once again, like Uniswap, I don't know why these guys keep doing this, but it hasn't optimized itself fully to capture that value, because it doesn't capture value through fees. Now, I wish it did. It does capture a little bit through the treasury. So I'm not completely right on that, but it doesn't capture 100% value through the fees, because what it does is it provides token holders with governance voting power. So if you have LDO tokens, you can stake them in Lido, or you can use those tokens rather to vote for snapshot proposals. Now, these snapshot proposals choose what they do and how they distribute the treasury. So the theory is the more transactions, the more TVL in Lido, the higher the Lido treasury is, the better it is for Ethereum, the more denominated, the more asset value they have denominated in Ethereum, because Lido holds a lot of Ethereum, a lot of staked Ethereum. So the better the price performance of that asset, the more the treasury accrues, the more it accrues through fees, then the more that the holders will get. But here's the thing. The holders don't get a guaranteed stake of their assets. Right now, it's a governance model, meaning you can vote on snapshots. Now, these votes very well may distribute tokens to holders in the future, but that doesn't happen right now. So a bet on Lido is a future bet on token distribution. Now, we know the markets are forward-looking, so this probably still does perform well, because the market will preempt, let's say a year down the track, holders and stakers of Lido are actually going to be receiving airdrops or receiving a distribution based on their vote. And obviously, they're going to vote themselves in to receive some profits when the time's right. But obviously, as per my show last week, we know that Lido's had some issues with runway. Not issues, but they're trying to configure themselves to secure a little bit more runway here. So I don't think right now the token actually accrues that much value, but it could in the future. And that's why I'm actually accumulating a bit of Lido. I don't think it's the best play, but I do think it is a good play. There's a difference between the best and a good play. I think something like a Matic, it's definitely the best. That's also reflected in terms of the price. But there are still a few more in this video that I think are very good. The first of which being Ethereum Classic. Very interesting discussion here, because many view Ethereum Classic as a hedge against the ETH merge failing. So what happens if the ETH merge actually fails? What if it doesn't go ahead? Well, we know Ethereum Classic was forked in 2016 after a major exploit where Ethereum decided, or the Ethereum Foundation decided, that they wanted to remove the transaction log on the Ethereum blockchain. But this changed the fundamental configuration of the Ethereum blockchain in order to remove those previous transactions. It obviously caused a lot of debate amongst the community, and the Ethereum maxis, or at least some of them at the time, said, no, we don't want to remove transactions. We want to keep the original log the same. We want to keep the blockchain the same. So let's fork. Let's create Ethereum Classic. These are the ones that want to stick loyal to the 2016 configuration. And that's stayed like that to this day. So even though Ethereum, the mainnet, is merging with the Beacon chain for proof of stake, the ETC chain, the Ethereum Classic chain, is maintaining the original proof of work consensus. Now, if the proof of stake merge somehow fails, then Ethereum Classic could see a lot of projects from Ethereum actually migrate and deploy on Ethereum Classic. And not only that, regardless, irrespective of a potential failure, just in the lead up to the ETH merge, there will be people hedging with Ethereum Classic. So maybe if the ETH merge is successful, Ethereum Classic sees a little pullback. But the thing is here, people are going to hedge. Hedgers are going to hedge. And for that reason, I think Ethereum Classic maintains a very valid thesis. Now, once again, it's already up 80% from lows. It's one of these coins that has pumped substantially already. But you guys know, we've been a fan of this hedge for the past few weeks. And a couple of our researchers got on this play. I personally didn't. I'm kicking myself a little bit because it was pretty obvious in hindsight. But I still think that there's definitely room for this to grow, especially if you want to hedge. If you have an ETH spot position, and you kind of want a little bit of protection over the ETH merge potentially failing, I don't think Ethereum Classic is a terrible play if you allocate a smaller percentage to Ethereum Classic. This is kind of how I see it playing out. If it's a successful merge, Ethereum Classic will perform well alongside ETH. So I don't think it relies on ETH's failure. I do think that just because it's in the ecosystem, it generally just gets lumped in with all the other ETH protocols, which means it probably still performs well in the lead up to the merge and following a successful merge. But a failed and delay merge kind of gives it a double whammy effect of this could see increased ETC speculation beyond Ethereum itself. Now, I guess the major argument is like Ethereum Classic, it's kind of shit, right? It doesn't really have that much network effect, kind of overvalued. I agree. I don't think it's a great protocol. In fact, long term, I don't want to hold this crap, I'm being completely honest. But short term, this could perform very well. Now, that is the difference as traders and investors that we have to differentiate. I think Lido, and I think Matic, and I think Uniswap, the three ones that I talked about earlier so far in this video, I think they're great long-term plays. ETC, not a great long-term play, but it definitely is one that still can perform in the next month. And that's why it becomes a play for August that you potentially want to look at accumulating, because this could perform well. And there's also many other projects. There's SushiSwap, which is another DEX. I prefer Uni over Sushi, but I want to give you the option anyway. We have Aave, which is another play. I do like Aave because of its stablecoin. In fact, I'm going to do a thread on this today. I think that would help you guys. They're coming out with the decentralized stablecoin. That's seen Aave pump a little bit. I probably wouldn't buy Aave into the stablecoin hype, but that's definitely a play here. One of the most interesting ones, and one that I think could do well, there's two of them. It's Optimism and Arbitrum, being kind of those L2 or kind of interoperable scaling platforms, EVM platforms off Ethereum, kind of like Matic, a little bit different. In fact, very, very different, but similar narrative that is following. I think these could be the next rotation, the L2 plays. So that's an interesting one to look into. In fact, if I look at Optimism, see how it's actually performing in price so far. Down 5% for the day. Up since its lows. I'm going to get the 30-day chart to get its actual low. 46 cents to $1. Wow, it's already up a 3x. Annoying that it's up so much, but I still think there's upside here because these L2 plays, they're going to be the ones that a lot of investors rotate into and speculate into. But that is a massive pump. But it did launch quite late, so this chart looks very different to what it would look like if the token launched, let's say, last year. But I do know a lot of projects are going on Optimism. Beethoven, there's some other Phantom projects. What's the other one? Liquid Driver, I think, all kind of launching on Optimism. I don't mind this as a play, just because I'm seeing a lot of projects migrate. I'm kind of seeing the narrative here. I think it has a little bit of firepower. And then you've got Curve and Convex, which I don't really like Compound and Maker too much because they're kind of, I don't know, I'm just not really a huge fan of the fossil DeFi protocols from 2020. I know they were great at the time. They're considered safer, but I'm just not a huge fan personally. Whereas Curve and Convex, I'm a massive fan of. I think staking Convex is still one of the best DeFi plays that you can make in crypto, and that's why it's on this list. But I'm saving these for a future video because I broke down the first four today. I'm going to break down the next four maybe later in the week for you guys because I think these four are very, very good as well. So Optimism, Arbitrum, Curve, Convex, probably my favorite four from this list. Now, obviously the question becomes, do we buy now? Is it too late? A lot of these have pumped. Is it worth getting in? Is this a great short-term trade or is this a long-term trade? They're the main questions. The first thing that I want to state is that buy the rumor, sell the news is very real, and that the Ethereum merge probably will be a sell the news event. Now, what this means is that a successful ETH merge, although there will be a pump in the lead up to the merge, and I still think, even though a lot of investors are front running this by about a month, I still think there's room to squeeze out a little bit more pumpage out of Ethereum over the next couple of weeks because, we could see the Ethereum chart, right? It doesn't look like it's over to me. You guys know my invalidation levels. You can clearly see that 2,000 is on the cards. Now, you can't tell me that if Ethereum hits 2,000, Arbitrum, Optimism, Lido, Uniswap, all these tokens that I've talked about in today's video aren't pumping. They will pump. Like, that's just the reality of this. In fact, I'll probably pump more because investors will get greedy and scale out of Ethereum into these alts. So there is room still in August for an Ethereum merge rally. So that is why I am starting to get a little bit of exposure to this ecosystem. I started a long time ago, so that's already something I've started doing. But just to keep you guys updated with that play, you guys know I've been buying Ethereum for the past 2 months. I've been saying it for like a 2 whole months now. But in terms of the L2 plays, the rotation play is still looking strong if Ethereum pushes up to 2,000. Can it be buy the rumor, sell the news? Yes. In fact, it probably is. So you probably want to get out of, if you're trading short term, you want to get out of these coins sometime in September, maybe early September, as we kind of get closer to this ETH merge date. Now, there's one thing that could ruin our trading plans here, and that is a delayed ETH merge. If the ETH merge gets delayed into, let's say, October, into August, into November, that could be very bearish because investors could sell off because that indicates some deeper underlying issues. I think an October delay wouldn't be terrible. Like a 2 to 3 week delay is probably fine. And I almost think that's priced in. I don't think anyone expects, most people do, but I don't think anyone expects September 19th, all this just to happen and go perfectly. I think I'm going to give this a bit of leeway by a couple of weeks, but any longer than mid-October, and that's panic stations, guys. Like, that is probably going to result in a major Ethereum correction. So that's one invalidation, which will obviously be reflected on the charts as well. We don't operate blindly here. We've got charts to underpin these fundamentals. So that's definitely a scenario that can play out. But if it is successful, I think that in the lead up, if there's still no change in the date, if everything's going well, if we're getting positive updates, then these rotation plays are going to perform well. And even though they've already pumped, they're still going to continue to perform well. So if you're trading in August, I don't think it's stupid to have some exposure to these. Now, obviously, you want to have exposure across a variety of assets. In fact, I'm probably more interested in the assets that haven't run yet. There's still many altcoins which haven't run. The Phantom ecosystem hasn't really run. I'm still accumulating more Solana. There are other ecosystems, the AVAX ecosystem, that still haven't really run. And gaming, that's a huge niche that hasn't even run, with a bunch of small caps which can pop if Ethereum explodes. So Ethereum doesn't become the only play here. It just becomes one that you want to have in your arsenal, in your toolkit of narratives, right? So it doesn't want to be your only narrative, but you definitely want to have some sort of exposure to it. If you guys want to see my entire thread, there's a link in the description to my Twitter. This has all the details and all the stats for you guys to look at, to substantiate, where we are, where we're sitting from lows, how far we are down from the tops, and how much upside these have. And you also have the entire list here. You could screenshot now if you want on your phone, if you want to have access to this entire list, or you can read through the thread on my Twitter. It's completely up to you what you guys do. But hopefully this gave you a little bit more insight into some of the altcoins I'm looking at. I am aware, though, that this video is complicated and lengthy, and you guys probably have a lot of questions. And also, I do think we still have to discuss the markets right now, because there is trades that I may be looking at taking. You guys know I'm open on my Bitcoin long. I kind of want to add to this soon. So I think we should head over to Instagram now and discuss, where I am going to add to this long, and also discuss what our potential play is in the short term. It's a very difficult market to trade. So I'm kind of looking at lowering the leverage now and accumulating a little bit more spot and low 2 to 3x leverage plays with invalidations. But that's all going to have to happen on my Instagram, because otherwise this show is going to be like 2 hours. So head over to my Instagram. We'll continue the live over there. If you guys want to, some scammers just copying a Crypto Banter post and tagging me. If you guys do follow me, I am following people back. I usually follow a few people back for supporting and joining the lives. And yeah, we'll head over to Instagram now and have a little bit of fun, do some Q&A and trading. And remember, I am going to be making a little bit of a short point. A short, what's it called? Sorry, Ray, your text is coming through now. I'm reading two things at once. I'm going to be making a little bit of a shorts push. By shorts, I mean short videos like YouTube shorts, Instagram shorts, reels, that kind of stuff on my Instagram. So if you're not following, I highly recommend following, because I think short form content is something Banter's kind of lacking at the moment. And it's something I think that you guys could definitely benefit from to get that quick news. I know how short attention spans are at the moment. The fact some of you are still here for 40 minutes is a testament to how dedicated you are in this market. So thanks to you guys for watching the whole video. But there's many other people that aren't, so that don't have such a long attention span. So if you're not following the Instagram, I highly recommend doing so. And yeah, I'm live over on Instagram right now, and you guys can join there and have a chat with me. I'll see you in the next show tomorrow, same time, same place, 7:20 p.m. EST. I'll catch you then. Until next time, peace out.